The rise of crypto-based treasuries, XRP holdings, and their impact on price action and liquidity. In recent years, we've witnessed a remarkable shift in how corporations and institutions manage their treasuries. No longer bound solely to fiat currencies and traditional assets, a growing number of forward-thinking firms are embracing crypto-based treasuries, strategically holding digital assets like Bitcoin, Ethereum, and increasingly XRP. As this trend accelerates, it could have significant implications for market dynamics, liquidity, and long-term price action. Why crypto in corporate treasuries? The shift toward cryptocurrency treasuries stems from multiple macroeconomic and technological factors. Hedge against inflation. Persistent inflation and declining trust in fiat currencies have led many companies to seek alternatives that preserve value. Payment efficiency. Cryptocurrency enables faster, cheaper, and more transparent cross-border transactions. Asset diversification. Digital assets provide a non-correlated investment vehicle, particularly during times of global uncertainty. Blockchain integration. Firms planning to utilize blockchain technology in their operations often hold tokens they rely on. Why XRP is gaining traction. While Bitcoin and Ethereum dominate the headlines, XRP has quietly emerged as a favorite among companies seeking speed, low fees, and regulatory clarity in payments. Ripple Labs' ongoing efforts to position XRP as a global settlement layer are now paying off in several ways. XRP's utility for cross-border payments. RippleNet enables near-instant settlements across borders, which makes XRP a natural asset to hold for international firms and financial institutions. Growing institutional adoption. Several banks, fintech firms, and corporates across Asia, the Middle East, and Latin America have started to hold XRP as a liquidity tool. Regulatory clarity in the US and abroad. Following Ripple's partial legal victories in 2023, more institutions are feeling confident in holding XRP without fearing SEC crackdowns. Tokenization of real-world assets. As Ripple advances its efforts in tokenizing real estate, carbon credits, and other real-world assets, RWAs, XRP plays a central role in powering those transactions. Impact on price action. If the trend toward crypto treasuries continues and XRP plays a growing role, the price effects could be significant. Reduced circulating supply. Corporate and institutional XRP holdings are often long-term. As more XRP is locked away in treasuries, less is available on the open market, potentially increasing the scarcity of XRP. Demand pressure. Increased demand from corporate treasuries, combined with declining supply, could lead to a bullish price trajectory. Volatility dampening. Long-term holders can stabilize the market by reducing speculative trading and panic selling. Boosting liquidity pools. Treasury holdings also indirectly enhance XRP's liquidity, improved on-demand liquidity, ODL. The more XRP that institutions hold and deploy, the more seamless and liquid Ripple's ODL corridors become. Easier market entry. Corporations holding XRP often engage in staking, lending, or decentralized exchanges, thereby deepening the liquidity ecosystem. Foundation for CBDCs and tokenized assets. XRP could act as a bridge currency between CBDCs and tokenized assets, increasing its utility and transaction volume. Looking ahead, the rise of crypto-based treasuries is more than a passing trend. It's a structural evolution in how value is stored, transferred, and leveraged. XRP, with its unique blend of speed, scalability, and interoperability, is well-positioned to lead the way in this shift. If institutional confidence continues to grow and Ripple's ecosystem expands into mainstream financial infrastructure, we could see XRP's price rise dramatically, not from hype, but from real-world adoption and utility. Moreover, the liquidity infrastructure that follows will serve as a solid foundation for future innovation in digital finance. Bottom line, as corporate treasuries become more crypto-native, XRP stands out as both a strategic asset and a critical infrastructure tool. This dual role could fuel a new wave of price appreciation and solidify its place as one of the most critical digital assets in the evolving financial landscape.